You guys come up with some wild stuff about why I don't turn up at the time that I need to turn up. No, I don't have diarrhea, my bro. Well, what's wrong with you, man? Anyways, welcome, ladies and gentlemen. What a day it's been. Surely this grants the idea of a rate cut right now. PPI came in lower. That's good news. But unemployment claims came in higher. And that's the highest it's been in 8 months. So we should be getting our rate cuts. But unfortunately, the dollar is getting smacked to, well, 3-year lows. And the euro's just like, see you later, man. Your interest rates are still high. And we still don't know where you're going, Mr. Federal Reserve. Or should I say, good old Jay Powell. At some point today, Donald Trump will be coming at Powell saying, cut the rates now, cut the rates now. Powell's just not going to say anything. I mean, if Jerome did have Truth Social or he had some platform where he was going to voice his opinion, he'd probably say to Trump, shut the anyways. What are we going to talk about today? Well, we're just going to break it all down for you, ladies and gentlemen, because this is now the point where the Fed does need to do something. Check this out. Stocks, dollar drop as trade fears stir risk off markets. Yeah, well, is risk off right now, or the fact that the stock market itself is making a significant move? Nasdaq has done this nice little base right here, and it's come away from these lows, locked in on the Asian session sweep, come down, come back into it again, picked up those vectors to make a nice little reversal to the upside. But this is the problem that we've got. Go over to Euro. Euro's just it's loving life. Look at that. Gone beyond its range daily high, up to its range weekly high. It's taken out its yearly highs, ladies and gentlemen. That was the yearly high back in April. And now it's just soaring up. Why are they going into the euro? Because, ladies and gentlemen, the problem with the dollar right now is the debt that's being attached to it. And that's the issue. Now, here's the readings. Coming at core PPI, another important metric for the Federal Reserve, came in at 0.1%. Projection was to see 0.3%. Why did they think it was going to go up? Maybe because companies are trying to adjust to the fact that the tariffs are coming into play and import duties are being raised. Well, that's not the case. They're cutting their costs of goods right now. And on top of that, you've got the PPI month-on-month that came in lower, but the unemployment claims came in at 248,000. Pretty much exactly the same as what it was in last month's reading, but they expected a little bit of a lower reading, which could give us the idea that maybe the unemployment rate itself or the market is getting to a point where it's starting to feel the pain from companies with laying people off, and of course companies trying to adjust themselves in relation to the tariffs. Now, Trump's come out and said he's going to be doing some more tariffs on certain products with certain nations, so the market hasn't liked that. Iran and Israel looking like they're going to start going into beef again, and that's really going to bring a little bit of a concern. Going over into gold's price action, you can see gold has made a significant move up. We had a projection this morning on gold, and we wanted to see gold make a move to the upside. It kind of hasn't made the move down, but it's made the pump up. I can't really claim that it was a valid play as such. But if we go into it, 8:30 this morning, they made the move low. I didn't get quite the retrace I wanted, but it's making its move up. And the only reason gold's going up is because there is the expectation that rate cuts are going to come into play. Now, let's just go over to the CME board itself and see where we are with those bets. They are expecting that the rate cuts are going to come in September, going into October and December. So here we go. 97.1% chance that at the Fed's meeting on the in 6 days' time, which you need to subscribe for. It's free to subscribe. Like the stream. It does not cost you a single penny to do so. But of course, by the end of this live stream, if you're happy with the flavor that we provide, then of course, if I've earned your subscription, happy days. Now, this is where we are. 4.25, 4.5% is the expectation from all the rate swap traders. Now, let's just go into July to see when these things change, because we do need to pay attention to this, because it helps us understand where investors' heads are at. Because if we know where investors' heads are at in terms of where the interest rates are going to be, that's going to tell us if the money markets, or should I say $7.5 trillion worth of capital stuck in the money markets, is going to start coming out of that and start going into risk-on assets, maybe even the bonds. Right now, it says 75% chance that in July, we're going to see 4.25, 4.5%. That's no good for me. September, so this is when they're expecting the cut. Now the bets are coming in. So this was roughly around 55%. It's now been adjusted to 61%, showing 4 to 4.25% on a rate cut. But the market doesn't really want that much of that small of a rate cut. 25 basis points, 50 basis points. Nah, man, Trump wants a whole point. He wants to be down at nearly 3.5% on the interest rates. That would then help the US economy. But speaking earlier on, let me just pull it up for you on what he said about this bill. Let me just bring it. Here we go. The great, big, beautiful bill. Let's just pull that bad boy up and have a look at it. Here we go. So this is what Trump said earlier on. Look at this. The great, big, beautiful bill will grow the economy like it has never grown before. At the same time, it is cutting expenses by $1.6 trillion. It puts our country on the right track, plus make America great again. You see, the problem with that, ladies and gentlemen, is Bessent said yesterday, we're going to increase the debt ceiling. Why is no one ever mentioning that? He's mentioned it twice. At the first cabinet meeting, he said, well, we don't need to worry about the debt because we've increased that ceiling, so we're all good for the next 2 years. No one said anything. And he said it again yesterday. We're going to increase the debt ceiling. How are you going to reduce the deficit? And how are you going to get investors to go into your bonds? Okay, go over to the bond market. How are you going to get them into your bond? Forget this. This is the 50-minute time frame. But when we look at the higher time frames on the bonds market, they are at significant lows. Okay. How are you going to encourage investors to get in if the deficit is still going to be a problem? Now, with that being said, it's a good day for the bonds because the yields are coming down. Go to the 2-year yield. You can see it's coming down at nearly down 1.77%, which is good news. That's followed by the 5-year down nearly 2% at 1.96, and then 87, sorry. And then you've got the 10-year down at 1.65, and then you've got the 30-year, which is down. As long as the yields are going down, that's good news. If the yields are down, it means the bonds are up. And if the bonds are up, that means low risk is being accumulated by investors. They're happy to go into low risk. Now, today, we've got the main bond auction. All right, we've already had 2. So the 3-year came in really well. The 10-year came in really well. We're now waiting to see if investors are going to be interested in the 30-year bond auction. If the 30-year bond auction also shows consistency and investors are looking to take on US debt, then that would be a little bit of a lifeline for Donald Trump because he's paying close attention to these bond yields. And if he sees that foreign investors are coming in, then it means that people are biting the carrot as such. They're like, okay, we're kind of liking where this is going. Okay, we've got this trade war story with China, and now he's putting tariffs on other nations. Well, we're not too concerned about that. But the main nation that we need to be paying attention to is the euro, of course, because that against the US dollar is causing Donald Trump a lot of problems. That being said, go back into the US dollar itself. Your dollar is losing. It has been losing and is continuously losing its value. So 97.2, no appreciation on the dollar. So you're now having to spend more dollars to acquire assets. Now, this is what I'm looking at in terms of the stock market. If we go over to yesterday's price action, okay, we had on the Nasdaq, we had a distribution day picking up. Here you go. So 4 distribution days on the Nasdaq, 5 on the S&P. Okay. Now, this is saying that your exposure should be between 80 to 100%. Now, usually what they do on this platform is they'll adjust it and say maybe you need to start scaling back and go down to maybe 40% to 60% exposure. So I do believe they're going to start coming to changing that, because if the day is really going to end up being good, then what do we need to see? We need to see volume coming in solid. So looking at the way the day is panned out so far, we just go over Oracle, man. Oracle, guys, is gapping up at the open today. It's massive. That could be another reason why the market's going to keep pumping today. But you can see here on the daily time frame that yesterday's price action led to a drawdown on the Nasdaq and volume above average. Now, the problem is as prices are going up, if they are picking up distribution days, it means institutional investors are selling on the way up. And that's a problem for us. We need to see accumulation days. And that is these blue bars down here. That means volume above average from institutional investors. Now, quickly going over into it all. Let's just go and have a look at Oracle. Oracle, look at this. Oracle Corp. Oh, there we go. Check this out right now. So currently at the 191. So that's going to be a good move for Oracle right now. It's getting ready to potentially break out. Hasn't cleared its highs just yet. But this, as a $460 billion market cap stock, it's going to grab attention. So that could be fueling the markets. Going over into NVDA, just to have a look at where we are with that. NVDA is coming in with a little bit of a gap down at the open today. So that's not really, is it? Come on. Nah, hold on. Yeah, it's a gap down at the open, but only a small gap down, so I can deal with that with NVIDIA. And then Tesla coming in with a gap down as well. Meta right now still doing the gap down, even though it's committing $15 billion into AI. So that's a little bit of an interesting one. Oil's price action seems to be pulling back. It has tethered away from the dollar because usually when you see it was actually following the dollar, and you don't really want to be seeing that, okay? Because when oil goes down, dollar goes up. So if you notice when USDCAD is trending upwards, that effectively means oil's going down. But if oil's going up, USDCAD should be going down, which right now that story is coming into play. So if you go over to USDCAD, you can see that is going lower. Oil's price is going higher because Canada is one of the biggest producers of American oil. So that makes sense. When the value of oil goes up, it serves the Canadian dollar. Now, with that being said, going over to Aussie yen. So Aussie yen's going down, which is good news. Not for America, but great for us, for the yen. The yen is climbing up. Now, if the yen is climbing up, we need to understand if investors are looking at the safe haven of the yen or they're generally taking advantage of the fact that it's cheap to borrow. So we go over to the 10-year bond market. Well, the yen bond market is going up and the yield is going down. That's good news for Japan. Okay, now remember, I said this a while ago. Their short-term interest rate is 0.1%. And unless it gets to their target of 2%, they're not going to be cutting their rates. Or should I say increasing their rates just yet. But if Trump comes with a discussion to them about Forex manipulation and intervention that they tend to do when the dollar goes badly against the, when the dollar rises against the yen too much, that's their ace card, in my opinion. They can really screw the dollar if they do decide to actually enforce a rate cut, an increase on the interest rates. But when you think about it, if they were to increase the interest rates, what does that mean? It means everyone's going to go over to the yen. It means that they actually force the markets to go down on the carry trade. But then how low will the dollar go? So that could imply that if they were to really do that, they could screw the dollar badly and send the dollar to unprecedented levels. Look at where we are at 97. Is it an area that we haven't been before? No, look, you've got all this. I mean, if we just go by vector candles, you've got a dollar coming all the way down towards 96. And then you've got another area down here where the vector sits at 94. This is good news for Bitcoin. It really is. Speaking of which, what is Bitcoin up to today? Bitcoin. All right, listen. I mean, look. I've said this before. Some of you might not like it, but I've said before that Bitcoin is not decentralized anymore. Bitcoin is Wall Street's bitch. Just to add insult to injury, 30% of the supply, governments and giants. I'm telling you, this is the biggest money heist ever. They're going to sweep it all up. You know, when you hear talks of people saying that Bitcoin's going to go to zero, it's going to collapse, it's going to this, going to that. Yeah, well, when you've got people that hold it and are in control of it, only an EMP would be able to wipe it out. But when you've got governments and big players coming into play and they hold 31% of the Bitcoin supply, what does that say to you? Yeah, try and get as much Bitcoin as you physically can, but the prospect of Bitcoin collapsing and, you know, it'd be no more. Nah, not if the big boys are holding it. And then they end up having their own marketplace where they just buy and sell it amongst each other. And then there's us over here, like, trying to trade it. And we're like, oh, we can only trade it with leverage. We'll never be able to trade it, you know, Bitcoin for Bitcoin because they hold all of it. So that's the sad truth about Bitcoin, ladies and gentlemen. It's no longer decentralized. Your idea has been wiped. But you wanted the ETF, didn't you? Yeah, you wanted the ETF. We needed the ETF if we were going to go see Bitcoin make moves to the upside. Where are all the dudes in crypto back then when it hit 69? Well, they took their money and run. The ETF's going up, though. 665,000, nearly tapping that 666. Grayscale back at it again with their movement of Bitcoin. But other than that, we don't really see that much activity from BlackRock. BlackRock yesterday picked up about 600 Bitcoin in total, 667 or something like that. or less than that, but it's still stacking the Bitcoin, you know, and it's an ETF. And remember, if $7.5 trillion worth of liquidity is going into ETFs, Bitcoin is over there. Just to put it into perspective, I'm going to show you exactly what I'm talking about. So if we just go into this, hold on a second. Wow, go away. Come on, come on, come on. Oh, man, it's not doing it. Here we go. Cool. Right. So if we look at the idea, why does it take so long? Come on, there we go. Right. If we just go over to the ETF, hold on. Where are you? ETF screener. And we look at the last 30 days of inflows on ETFs. Look at this. Net cash inflow. Who's up top? Bitcoin. Up there. QQQ's, go away. QQQ's down there and VU. But Bitcoin is the most volatile one. Look at that. Okay. So it's up literally 132%. All right. So when you're seeing that, it's just telling you that institutional investors are plowing into that. Okay. And that's evident with the balance itself. Right. So where's Bitcoin's price? Well, Bitcoin's price isn't really doing too good right now, ladies and gentlemen. It's not following with the script. All right. Now, how many of you believe that it's effectively the top? How many of you, Bitcoin rewards the patient? Yes. Bitcoin does reward the patient. Okay. But you want to be holding walking sticks and being aided to go for a piss, but you're still there with your Bitcoin. Like, no, you don't. You want it now. You know, how old will you all be in 2045 when Bitcoin hits 13 million? Give me your ages. Come on, type in there. Where would your brain, how old will you all be if you, hold on. I want a, bro, what do you think about the percentage of other assets are that government holding? Yeah, well, it all depends on those assets and what they are. I mean, it's the balance sheet that we need to pay attention to. Tino, I would like to have your thoughts. Well, listen, what I'm going to do tonight, guys, is there are a couple of questions that have been asked in the comment section, and I'm going to pull out a couple of them, and I'm going to address them this evening. So if you've got questions about the macroeconomics of everything, and look at these numbers, man. Shit, man. Look at you all. You will all qualify for a pensioner's bus pass. You will all have a walking stick. Who wants to hold their Bitcoin with a walking stick? You know, you ain't getting laid, bro. Like, I don't care. You can have all the Bitcoin in the world, but if you're like, look at this, 76, 98, 75, dead, you know, 124, like, where's your game, man? You ain't going to be pulling no Hugh Hefner in this game. You understand? Anyways, forever young, yes. So, look. Yeah, I'm going to be answering a few questions in tonight's live stream, but I'm going to pick a few so that we don't go off topic and make the live 300 hours long. But I just want to address a few questions because someone asked something about the general economy and one perspective against the other. And I think it'll be a good little discussion. But if you've got any questions, please, in this video, in this live stream, when it's finished, just comment below any questions about where we are with tariffs, with Trump, whatever asset it is, whether it's euro, yen, dollar, Bitcoin, just fire away those questions. And I'll look to try and get a few of them answered for you in the evening streams. Okay. Now, okay, just to put it into perspective, let's just understand where we are with Bitcoin overall. So let me explain something. Over the last few days, we've been getting data that would naturally suggest that we would expect the market to react positively. And we haven't been getting that positive expectation, okay? Looking at where Bitcoin's price action is right now. Oh, not again. I've got to pay for that. But anyways, looking at Bitcoin, you can see that we've got quite a collective of bids right now, okay? Quite a collective. And what you've got to understand is this. Based on the way Bitcoin moved, look, I'm going to give it to you like this, right? Look, just to help you understand. We know that when prices are going up, people are selling. And if that confuses you, just bear with me, right? It's on the premise that down here, okay, so if price is making a move down inside of this range, here, and of course, here, and if we go even lower, here, there is people that are putting limit orders and buying up, okay, on the backs of the people who are aggressively selling, all right? So just to justify that, you can see here that in this chart, you've got these guys here. Those are limit buy orders, bids, and someone just picked up 22.81 million at 108,200, okay? Let's go into another order. We've got 5.67 million when the initial amount was for $1 million. So what's it telling you? It's telling you that participants are coming in to try and pick up Bitcoin on what would appear to be a perceived discount at that point in time. Now, because so many bids have come in here, okay, the idea of a discount could be triggered to send it further down, where you see an influx of buyers, and then all of a sudden, because price is going down, filling these orders, sellers are coming in, and the bids will be stepping in to pick it up, which means that equally, when you see a fast move down, it will then be met with a fast move back up. Just look at this one. This started a big move lower, and then they instantly made the recovery back up, and they recovered. All of this is people selling the Bitcoin, okay? Now, what we're looking at right now is they've started this cluster of bids, okay? So if they're starting to bid as high as they are, the logic says that Bitcoin may continue to roll over to fulfill these bids. Now, let's just look at where we are inside of this range. We can effectively assume that we've got orders, well, not really that many orders coming into play. They're all ones and fives, so there's no real big orders. But what I'm looking at, okay, is the fact that for every time Bitcoin came down, an initial order, well, there's 30 million right there. But if we have an initial order of, where was it? We just saw it. Where was that order? I just saw it. No, where was it? Okay, so that order of 20. Okay, so here's an example. 5.67 million. Someone came in and bidded at that point, but they originally there was an order there for 1.02 million. Okay, so what does that tell you? It tells you that someone saw price and said, yep, I'm happy with that. Okay, and there seems to be quite a bit of that happening in this range. All right, we've got some solid bids right now. I just had those orders. Where were they? There's lots of 32 million, 5 million there. There's some big bids right now. Very big bids at these ranges. Very big bids. What I'm trying to convey to you all is this. As it goes down and we see initial orders of 1 million, but they transact 30 million or they transact 10 million, means this area is being monitored. Okay, and people just want to quickly come in and buy at what they perceive to be a low discount on Bitcoin. So what I'm suggesting is, because we've got this wave of buying here, the next logical spot for buyers would be all the way down here and potentially inside of this range right here. But all the way down here to the 100K mark, God forbid. How many of you just said right now, I want Bitcoin to be bearish, I want it to go down, because you're not paying the premium? Well, it looks like they're starting the discount phase where it's going to roll down, okay? Now, whatever news announcements comes out for Bitcoin, okay, to send it back up, I mean, it's going to be one of those where does it really have the capacity to move back up? Well, let's just firstly look at where we are on the daily time frame. Market's not open just yet. We're going back to what we know, ladies and gentlemen. Here we go. 5 and 13 EMA. Go back to the last few live streams. Let me explain to you what happened from then. Bitcoin broke the 5 and 13 EMA, traded away from that range, okay, and formed this low, right? Today, it is testing the 5 and 13 EMA. It's broken beyond the 5, which is the yellow line right there. We just do this and you'll see it. There you go. So look at the screen. You can see that price is trading below the 5 and 13 EMA. 13 EMA is red and the 5 EMA is yellow. Now, price needs to come back up and close above the 5 to solidify the idea that they are preparing to roll price higher or go higher. Problem is, you've got this range right here. It's taken 1, 2, 3 candlesticks and they couldn't even clear it. Look at this candlestick. Some of you Japanese candlestick traders would understand this to be an evening star pattern. However, the logic of the evening star pattern says that the third candle needs to be 50% of the first candle. Well, it isn't 50% of the first candle, okay? It's just a little bit further down. But now you've got this candlestick that has breached that and it's worked its way into this range. Now, if by the end of the day, Bitcoin closes and stays below the 5 and 13 EMA, the logic would suggest that Bitcoin is being primed to come back down again. Okay? That's not bearish. You had your chance to make some money on Bitcoin. If you didn't, then that's unfortunate. But the bids are starting to show promise. They want to start picking up again for the next bout of movement to the upside. Yeah? You buy low, you sell high. I know it's a very tricky one, okay? But that's the logic right there. Go to Ethereum. Ethereum, you're saying to yourself, what's going on there? Well, we've just had this huge sweep of this consolidation, okay? And it hasn't been able to contain itself and close above that point, all right? And when we look at it, she took out that area of liquidity and then tapped into this violet vector candle. Look, this is what I'm saying about vector candles. Tell me why they are. Just look at what's going on in the chart. Look at this point and then look at this point, right? And I'm going to zoom in on each one just to put it into perspective right at the tip. So look at that, right? Now, look at that. Now, if you include the wick, yeah. But if we just go down to the actual vector candle, go across, quite frankly, that takes the piss, ladies and gentlemen. That really does. And if you were a block trader, right, that means you're using the block trade principle, you would have probably done the following. And it takes balls to do it. If you take the high of the vector candle, take the low of the candlestick, and just mark it across, we'll mark it towards that point, all right? Just make it there. The block trade principle says that you take the high and take the low. Principle says that at some point, the market's memory is going to get triggered inside of this range and this range here. And they can in the middle. But if you were seeing that price was coming up and it wasn't succeeding at getting above that range, you principally could be running shorts off that logic because there was no commitment to break above it. So if you waited for that candle to close, you would have said to yourself, you know what? Okay, it's coming down. I'm going to take my shorts. You would have taken some shorts and you would have been in a bit of a successful move to the downside so far. But that's the block trade principle. And it's just mad how they just respected that one vector, fully recovered it because it was the only bit that was left behind. And then they've rolled back down again. Okay. You can do the same thing on various other assets. Various other candles as well. So you've got a vector block right here. You've got this vector candle. So for those of you that are looking for continuations to the upside, you effectively need to wait and see if Ethereum can hold within this block. And when I say hold within the block, the idea is that if price does come back into this zone, you need to see it consolidate and hold within this range. Because if it can't hold within this range, then the chances are it's just going to come back down again. All right. But if it can succeed at holding this range and move up, the midpoint of this vector block would be the logical spot for you to take advantage of a breakout and trade towards the other side of the block. So if you're happy with a move from 2,748 all the way up to 2,819, happy days. But then if you do see the momentum and it continues, a breakout of that block would suggest that the market's memory of guys who are effectively offering price up here is going to continue here and beyond. It's all bid and offers, ladies and gentlemen. It's who is buying and who is selling. Yeah? And when you've got that in your mind and then you scrap all the other BS that is out there, then you are in line with the person that is committed to putting liquidity into the charts. You know, you got some guys who are bidding there. So there is interest in this area. All it takes is Donald Trump to talk about the Beach Boys. And then that's what happened today. Donald Trump spoke about one of the members of the Beach Boys, okay? And the Nasdaq pumped. What kind of a market is this? What kind of a market is it? It baffles me, but never mind. So, any other questions, ladies and gentlemen? We've got the market open right now, and the Nasdaq is doing dog. Nothing. Dead. Euro, where are you, my child? Euro. The dollar killer. Bitcoin en route. Anything else? What about the red vector above it? Why doesn't that get recovered too? Because it's not got the momentum to push it. When you recover a vector range, price usually pulls back from it. So then the pullback is going to tell you if there is a means to continue to move back up. And if they can succeed at breaking above the previous vector that was recovered, then the logic says that the momentum needs to come in to then suggest it to go higher. Don't just pick a random vector candle and be like, oh, it's going to go back to that one. Trade towards the vectors that are close. That's how you improve the odds of a trade working in your favor. All right? Anything else? Get your safe havens. This is true. Are you bullish on XRP? You guys piss me off, man. Am I bullish on XRP? Mods, can you ban that person, please? Can you get them out of the live? He's just asked a sour question. He's just not sitting right with me. I'm joking, don't. I'm joking. 3 o'clock. This is true. The 3 o'clock pattern, ladies and gentlemen. 3 o'clock pattern. Anyways, ladies and gentlemen, listen, mad love and respect. The Brinks box is about to get underway right now. It's 9:30. Please trade safely. Like the live stream, man, on your way out. Subscribe if you've enjoyed anything. But it's safe haven environments. Euro up, yen up, gold up, dollar down. Even though we've had good data, the market doesn't seem like it's liking it. Any moves to the upside by the stock market today, be mindful it could be done on light volume. Okay? So just pay yourselves accordingly. And I will check in with you all later on. Take care of yourselves, gang. Stop winking, you wet fish. Sorry.